As a retiree or soon to be retiree, there is a 47% chance that you will need paid long-term care. Don't believe it? In 2020 alone, Americans paid $64 billion in out-of-pocket expenses for long-term care. Keep in mind, the best solution may be to do absolutely nothing. But spoiler alert, the answer certainly is not to buy traditional long-term care insurance. We'll talk about that. What is for certain, not addressing the long-term care issue at all can be a recipe for retirement disaster. Hi, if we haven't met, my name is Christian Cyr, CPA, retirement specialist, founder of the AIM retirement system. On this channel, we make videos to help retirees and soon-to-be retirees navigate retirement issues with two goals in mind: maximizing chances of retirement success and increasing multi-generational wealth. Let's get started. Addressing long-term care is a two-step process. Step one, understand the risk. Step two, mitigate the risk. Why? Consider this interaction I had with a client just this year. He's extremely disappointed. Before he became a client, he purchased two long-term care policies, one for him, one for his wife. He's been paying into these policies for 10 years, and all of a sudden he gets a notice from his insurance company, your premiums are going to double. He gets upset, but he pays them and life goes on. Last year he got another notice, and this year the premium notice was an increase of 250%. As it says in the notes from the meeting, he feels sick about this and he is looking for another alternative to protect himself and his wife. If you actually go and look at what I wrote down after the meeting, I think it says it all. In my assessment, my post-meeting notes, I said he was expecting in his financial plan to pay $200,000 of long-term care premiums over the entire course of his retirement. Now, with these increases from these long-term care insurance companies, he is looking at, if he continues to pay the premiums, $600,000 to $1.5 million. This is crazy. Long-term hybrid protection products have become increasingly popular as a long-term care funding strategy. Generally, these products are life insurance, but kind of light on the life insurance. In other words, the death benefit for the traditional life insurance policy is high. These death benefits are much smaller than usual. However, they have a very robust long-term care component if they are needed. Unlike traditional long-term care insurance, this is not a use it or lose it. This is a use it or pass it along to your heirs. Let's take an example and see what I'm talking about. So I've got a fictitious 65-year-old couple. They've saved $1 million. They've come into the office. They're going through the AIM retirement system. We've identified that we can take $850,000 of their nest egg and put it into a very viable retirement plan. The AIM retirement system is putting through all their paces, and with this $850,000, they have a very nice looking retirement plan with, let's say, a 98% chance of retirement success. However, they're very concerned about long-term care. They want to have protection. We have $150,000 that we've moved over into a separate bucket, the hybrid life long-term care protection bucket. Let's see what that looks like for them. So very simply, you'll see the $150,000, it does one of two things. It's a very simple product. That $150,000, if they have a healthy life for the rest of their life and never need long-term care, the $150,000 turns into $200,000 tax-free death benefit for their children. Okay, but what if they have long-term care issues as they were concerned about? This $150,000 is no longer a $200,000 death benefit. It is now turned into $700,000 of long-term care protection. This is a joint policy, okay? That's why I like it the best, and that's why they're popular. If you get the right one, it's a joint protection. So coverage can be for mom, can be for dad, or both of them. $700,000 of long-term care coverage if they need it. So effectively, what have they done? They've taken 15% of their nest egg, which they didn't need because the 85% over here in their retirement plan is already giving them a very confident and comfortable retirement. The 15% is more or less an insurance policy. It's actually literally an insurance policy. That money is going to turn into a great tax-free benefit for their heirs or $700,000 of long-term protection. This type of solution can make sense if you're in that middle red category, that category where you're not a multi-billionaire, but you've saved up enough money that you probably want to do something about that. So a word of warning about these long-term care hybrid strategies. I have studied them for years. I've used them for years in the right circumstances. But you're still betting that you're going to need protection. right? I have seen many instances where simply investing the $150,000 of that money in a balanced portfolio can, again, in many instances, provide the same level of long-term care protection or even more. So it is a case-by-case basis. Remember, you're identifying which category you're in, and then you're having a discussion with a qualified Level 5 advisor to decide what's the best way to go. I found that these hybrid strategies are the most effective in certain situations, specifically the following. Situation one, you're in the middle category, you've saved up a considerable amount of money, but not enough that you have unlimited resources. And you have reason to believe, family history, your own personal history, that you may be more likely to have a long-term care stay, and especially if it might be longer than just 1 or 2 years. That's situation one where these hybrid solutions can be effective. Situation two, these products can be effective for retirees who are just concerned. I have a lot of clients who walk in the door, they've saved up a lot of money, they're healthy, their parents were healthy, they don't have anything in their family health history, but what they do have is a deep concern for going into a nursing care home. These products can be effective in alleviating that concern for that type of person. And situation number three, these long-term care hybrid protection products can be especially effective in cases of cognitive care, Alzheimer's, dementia, et cetera, et cetera. Hey guys, I want to tell our listeners today about our most powerful tool, the AIM Secure Retirement Assessment. This is something that I built from the ground up. You answer 9 questions. We throw it into our AIM retirement system. We put your current situation against the 7 biggest retirement risks that people face in America, and it spits out a customized report, gives you the 3 most actionable things that you can do to help supercharge your retirement.
Yeah, and it answers a question of when they can retire and how much they need to do that.
Or if they're already retired, we can see how long their nest egg will last.
That's right.
And it also introduces the idea of mailbox money to people.
Yeah. Like how much can we put in a protected mailbox money where we don't have to leave too much at risk against the stock market.
Yeah, you can also learn how our CPAs can save you money on a Roth conversion.
Yeah, and that's the DNA of what we are. We were a CPA firm first before we ever thought about helping people retire. Mm-hmm. The AIM Secure Retirement Assessment Tool, the most powerful tool we have, it's not a stale report, it is customized, mm-hmm. 9 questions. I promise you, I guarantee that you will get great information from this. Where do we get it from, Brooke?
Just visit retirementforlife.com, answer 9 simple questions to receive your complimentary assessment today.
9 questions, guaranteed awesomeness.